reversal. Focus on catching a move in the market. The money will come. Okay. Obviously, next thing I said, like, you know, it's a journey, so you will need to grow. Okay. So what does that mean? That means there's going to be lessons that you're going to learn. There's going to be things that you're going to have to overcome. All right. So if you're somebody that's been over leveraging your account for a while, that's okay. Just know I'm here to be so solid with everybody. If you are still over leveraging your account, even though we told you not to, you will learn your lesson, and it's going to cost you $1. It's going to cost you a lot of dollars, actually. But here's the thing. That's the beauty in growth. Okay. You're learning from your lessons. So let's say you missed out on a move. You missed out on a trade. That's okay. Study the market. Study why you missed that trade. If you over leveraged an account and blew it, study what made you over leverage. Were you excited? Were you thinking about the money? Were you thinking, I need to pay my bills? Were you emotionally attached to the trade? Next one, really quick. Sometimes we get so caught up in our past failures and success that we limit our present selves to what we can do. I want to let everybody know on this call. I want to let everybody know. It does not matter who you are, what you do, where you live, what you stand for. It doesn't matter what your past is, and it doesn't matter what your present is. You can learn trading and you can be successful at it. I want everybody on this call to make the decision and tell yourself you are not only qualified to have success trading, but you will have success trading. Okay, so many people put themselves on a low pedestal because they go, oh, you know, I'm not smart at school, therefore I can't learn how to trade. You know, oh, I'm super smart, I can definitely learn how to trade. Or, oh, you know, I never went to college, I'm a high school dropout, I can't learn how to trade. That is all false. Understand, trading is just a skill set. If you can learn how to cook, if you can learn how to throw a ball, you can learn how to drive, you can learn how to trade. Okay, now check this out. What is trading psychology? Trading psychology is a broad term that pretty much includes all the emotions and feelings that a typical trader will encounter when trading. So check this out. Some of these emotions, okay, and if you're taking notes, I would highly recommend writing these down, okay? Fear, greed, being nervous, and anxiety. Write those down. Those are some emotions that you're going to be taken through. Those are some emotions that you're going to have to overcome. Understand that when you are trading, the only thing that is getting in your way is yourself. At the end of the day, if you know how to trade, if you know how to mark up a chart, you can be successful. It's just a matter of you overcoming yourself, okay? Which actually ties it in to our next one, okay? Check, it's a skill set. So once you learn, you can only improve. So if some of us, you know, if we have trouble trusting our analysis, like, oh, I don't know, it just hit my trend line, but I don't know if it's still going to continue to go up. Oh, it just hit a level of resistance, but I don't know if it's really going to go down. Okay. Have confidence. Have confidence. Honestly, have confidence. At the end of the day, you're just drawing lines on a chart. You're not risking your life. Okay. Like, seriously, be real right here. You're not putting your life on the line. You're just drawing a line on a chart. Okay. And if you still don't have enough confidence and you're still like, you know, some of your trades are hitting stop loss, that's totally okay. Like I said, it involves growth. You will have to learn. You will have to improve. Okay. We have Go Live. We have the Academy. Feel free to invest as much time as you need to get in there. Okay. When I personally was going through this, my first like 3 days of taking this serious was nothing but the Academy and marking up charts. After that, I was literally on every single Go Live session that I could. Now, obviously, a lot of us on this call, we don't have the time that I had, and I totally respect it. But just understand, it doesn't matter how much time you have. What matters is what you do with your time, okay? Okay, now proper leverage, okay? Check this out. Greed and fast money are best ways to lose your money, okay? If you're over leveraging, that is an emotional trade. I don't care how confident you are in your trade. I do not care. Neither does the market. If you are emotional with a trade and you are over leveraging, you are putting more at risk. Okay, we are here for the long term. Okay, understand that we are here for the long term. All right, compound works wonders. Google it. How much is a penny worth if doubled every day? Google that. How much is a penny worth if doubled every day? Okay, compounding is literally, I think, I want to say, how many wonders are there? I think there's like 6 or 7. I totally forgot. There's like 8. I think there's 7 wonders of the world. I think they said compounding is literally the 8th wonder of the world. Yeah, compound interest. I also want to let you know, Mandy, that we can't see your email that you filled out.
I don't know. I'm trying. Guys, my email just wants me to pay attention. Hold on. It'd be popping up all day, guys. All right, my bad.
You're good. You're good. Okay. Now check this out. Look, I'm going to be so real with everybody that's on this call. I'm not here to waste anybody's time. Look, at the end of the day, you signed up with us to make money, not lose it. Okay, so if we tell you to do something, I would highly recommend doing it before you let yourself lose money. Literally, if you do not listen to us, you are handing your money back to the market. If you are making money in the market, congrats. I love you. Congrats. That's amazing. But the second you let your emotions get involved, the second you over leverage, the second you lose any trade, you're literally giving the money back. You're saying, hey, appreciate you, market, for giving me all this money back. I worked hard for this. You know, I've had plenty of sleepless nights studying. I've had plenty of time in the chart studying this. But you know what? Here's all of my efforts back. That is literally what you're doing. You're literally giving the money back, your time and energy. And let's not do that, right? At the end of the day, we're here to secure the bag, not give it back. All right, so if we can go to the next one.
Facts.
Okay, now that's enough of me. I want to go ahead first, though, and make sure that Cruz is actually on this call. Let me go ahead and get a confirmation before I just start going off here.
Yes.
He is? Okay, cool. So great. That's enough of me. Hopefully you guys, have had enough of me. Hopefully you guys got some value. But I will say this. If you haven't been taking notes, which, I highly recommend you do, I would start taking notes this very second. Because the strategy that Cruiser is about to go over, I want to let you know this right now. Institutional trading is freaking phenomenal. Why? Because here's the thing, price trap strategy is amazing and we highly recommend it to people that just started trading. Why? Because all you need to know is the basics. It is nothing fancy. You just have to go through the academy, 100 and 200 series, and then you can start trading using that strategy. For this strategy alone, you have to understand the markets. If you do not understand any of the terminology that Cruiser is about to say, that means you need to go back to the academy. And I'm just saying that because I'm here not to sound like an a-hole, but I'm here to sound like somebody that's trying to get you paid. So institutional trading, the beauty in it is the fact that you are literally trading with the banks. But I'm not going to talk about it too much. I'm going to let Cruiser go ahead and take over now. And if you don't know Cruiser, you're going to know him soon because he's about to drop some massive value and literally give you guys the keys on how to trade like the banks. Okay. And remember, the banks are the ones with all the money. So we're literally trading just like the people with all the money. But with that said, Cruiser, are you on the call? Can you hear us? Can you let us know you're here and can you take over?
Yes, sir. Can you hear me?
There it is. Yep, we got you.
Yeah, we hear you.
Let's get it going. First of all, guys, drop a 777 in the chat real quick for Lewis. He just dropped some mad nuggets. I appreciate the value. I appreciate the mindset. And to be honest with you guys, he went over the most important part of the call. Like, I truly believe that success with trading is 90 to 99%, psychology and less than 10% actual strategy, which is what I'm going to be talking about with you guys. So super excited to, go over this. And yeah, guys, I've been trading, for 2.5 years. And trust me when I tell you that I've tried everything. Like, I tried every strategy, every educator. I was that, person who had shiny object syndrome. And I was like, oh, let me try this strategy and this one and this one. And guys, when I found, institutional trading, like Lewis was talking about, I got really excited because it's something that just made sense to me, guys. And so if you're brand new, if you're in your first week, your first few weeks, your first month, honestly, not all of this is going to make sense. And that's okay. It's not supposed to. However, if you're able to, just learn a little bit from this, I promise you it'll all start to make sense very, very soon. So yeah, guys, so check this out. 80 to 90% of the movements within the markets come from the banks. So as retail traders, we're like less than 10% of the entire markets, individual traders like you and I. The banks are the ones who are the major players in the game. So they're the ones, when they buy or sell, and they're using millions and millions of lots, they're the ones who are actually moving the market. So here's the thing. Technically, we're trading against the banks. So they want us to lose. That's why most traders fail. You guys understand that most traders fail, right? Most traders fail. So what do you want to do? You want to trade with the banks, and that's exactly what institutional trading is, or a lot of people call it smart money concepts. Smart money meaning the banks. So yeah, guys, excited to jump right into it. Let's do this real quick.
You're able to share your screen, right? Oh, yep. There we go.
All right, cool. So here, so let's talk about the basics. Let's talk about the basics of institutional trading really quick. So check this out, guys. Let me scroll over here. Yo, my computer literally just kind of froze. What's going on here?
Yo, side note, those colors are fire, bro.
Hey, thank you.
On your charts, they make me feel calm. That's important.
All right, so let's see here. So guys, before the market typically makes a major move, what you will usually see is some form of consolidation, meaning the market's going sideways, right? You'll usually see some kind of consolidation, the market going sideways before you guys see like a major move. All major moves in the market start with consolidation. That's the very first phase of any movement. And then eventually you'll either see a sharp move to the downside or a sharp move to the upside. So what happens is you see, here's what you'll see. A lot of retail traders, what they'll do, meaning like, people who are, just brand new with trading. Check this out, guys. The information on YouTube, the information, on babypips.com, which is free trading education. All that stuff is controlled. What do I mean by that? What I mean by that is the same way how in college, they don't teach you about health, wealth, and happiness, the most important subjects in life. The same thing is what I'm trying to tell you here. The information is controlled when it comes to trading. They teach you the basic patterns for a reason. There's a reason why you could search up basic Forex patterns and all the same things will come up, because that's what the banks want you to see. So you gotta, basically do what it is that they do so you can get the same results as them. So check this out. One of the most easy patterns to recognize for a brand new person is the M formation or the W formation, the double top or the double bottom. So price will come up and it'll create a quote unquote ceiling, right? And then price will come up or come down a little bit and then come back up. And then this is the, the shoulder, right? And people will sell right here because they say, oh, it bounced off this ceiling before. If it comes back up to this ceiling again, then it's probably gonna bounce off of it again. That's the psychology behind the M and the W pattern. And it's very easy to see. But remember, guys, you've got to remember that we're trading against the banks. The banks do not want us to win. The banks make money when we lose money. So that's why oftentimes what you'll actually see, here, I'll show you guys. So here's what happens. Here's what actually happens. Let me delete all this. Sometimes it works, don't get me wrong. Not everything is here to fake you out, and sometimes those patterns will definitely work. But oftentimes what you'll actually see is something more along the lines of this. You'll have price come up, create a quote unquote ceiling, right? Come up again and create a quote unquote ceiling. And I'm just showing you so you guys can get a visual before actually doing it on the charts. And then price will come up again right here, and maybe it'll even come down a little bit, right? And then you'll start to sell. And then boom, all of a sudden it shoots up above this quote unquote ceiling right here that was supposed to be super strong. People say what? The more touches, the more strong it is. The reality is the more touches that it is, the more obvious a certain pattern is. You got to observe the masses and do the opposite. In the same way in trading. Oftentimes, the more, that's where I'll explain. So check this out. This right here, we call this liquidity. What is liquidity? So liquidity is when people are selling right here and people are selling right here, their stop losses are up here. So what are the banks going to do? The banks are what they're going to do is they're going to come up and hit everybody's stop loss up here, spike up before making that major move down. I hope that makes sense. So price comes up again. You see that double top or that M formation, and it works the same way, with a W formation as well. And then it comes up again for a third, fourth, fifth time, however many times. And you think the stronger that, the more times it touched off the ceiling, the stronger that the ceiling is. But the reality is that means the more people who are selling right here, the more retail traders who are selling right here, the more likely the banks are to come up, push volume, push orders, buy orders into the market to hit your stop loss before continuing to go in that direction that you want it to go, all the way down. But check this out. Here's what happens. What you want to do essentially is, where it's safe to enter is you wait for price to pull back. That is where you're going to enter, and I'll explain why. Boom, because that's right before the major move actually happens. So check this out, guys. Here's how it works. Price comes up, hits your ceiling, comes up, hits your ceiling, comes up. It might do this 3, 4, 5 times, but eventually banks say, this, they call it an FU candle. It's literally called an FU candle, or an institutional candle, where it literally comes up, hits everybody's stop loss before going in the direction that you knew it was going to go, which is a sell. However, it'll typically pull back before it goes down, and I'll explain why. So let's look at the actual charts for a second. And I know this might be confusing, but I'll tell you guys this. You don't need to know everything. If you could see the pattern that I'm showing you, that's all you need to know. All you need to be able to do is recognize the pattern. You don't need to know what things are called. You don't need to know the fancy name of things. But if you could see the pattern, that's all that matters. So it's not rocket science. Let me check the chat box really quick and see what's going on here. Mind blown. Illuminati, you guys are funny. All right. So check this out. This was actually the last trade idea that was sent out on Steady. So I'll show you guys really quick. All right, check this out. Yo, I don't know why, but my computer is going extremely slow. I think I need a new computer, to be honest. Yo, what is it? This is. Can you guys hear me, Mandy? Can you guys hear me all right?
Yeah, we can hear you perfect, man.
Yo, this is weird. Here, I'm gonna exit out real quick. Hold on. Let me try going on Safari really quick, because I don't know what was going on, but that was not working. Hold on. One sec. I apologize for the inconvenience. One sec. All right, that's weird. I've never had this happen to me before, but the show goes on. Tradingview.com.
Bro, do we gotta start you a GoFundMe and, you know, get you some money for that computer, or you got it?
Mandy, you're a clown.
You're funny. Yeah, you want to buy me a new laptop? No, it's crazy. I've had my laptop since 2016, and I think it's time for me to get a new one. I have my.
I said GoFundMe, bro. I'm not buying you. I'm raising money.
I like how everybody's having computer issues like right now.
It's because everybody's using the Wi-Fi.
Well, that, and I torched my entire computer like last night, so I'm like, shit.
Computer overload.
Yep.
You get a computer. You get a computer. Hey, Cruiser, when you become chairman, could we all get one, bro?
I'm about to tweet Oprah.
That Chairman Infinity bonus, we need that.
Ooh.
Special computer for trading. They should make trading computers.
They're called MacBooks.
Hey.
I'm playing with you. Anybody that has an HP or a Dell knows they need a MacBook. I got an HP and a Dell. It just sits there, guys.
Do you? And you have a MacBook too?
Yeah, but I only use the Mac. The other one's a dinosaur, bro.
Why do you have it then?
Memories. It's hard to let go. I was gonna donate it to you if your computer doesn't start working soon.
I was using it and it was working fine until I come on Zoom. I don't know why. But all right. Can you guys see my screen? Yes?
Yeah.
Yes, sir.
Okay, perfect. So check this out. So you see what happens, price comes up. This is on the 4-hour chart, by the way. Price comes up and then boom, hits the ceiling, right? And then comes up again. And then this right here, this candle where this white candle right here that I'm pointing at, I'm gonna remove the mouse so you can see it. But that candle is called a doji, right? That candle where you have 2 wicks on both sides and then a small body is called a doji, and it's a potential reversal candle. So that's what people are taught anyways. So when price comes up, hits the ceiling, and then price comes up and hits the ceiling again or comes close to it, and then there's a doji, there are countless amount of retail traders that are selling right here. And then why is it that price literally shoots up and then shoots back down in the direction that you knew it was going to go already? If you haven't had that happen to you yet, it happens. And answers, because when banks see these obvious moves, they'll buy, inject, literally, no joke, millions and millions of lots to shoot price up, and then tens of millions of lots to shoot price back down. But here's the thing. The way that banks trade, there has to be an equal amount of buying and selling power at the same time. What do I mean by that? What I mean by that is they can't just do what you and I do, where it comes to like, we could press buy and then it goes up and then close the order and then click sell and then for it to go back down. They have to have someone to buy and sell their contracts from. So what happens is when they shoot price up and then shoot price back down, what you got to understand is when they're buying right here, when they enter, millions of lots and they're buying right here, they can't close their buy up here. They buy with millions of lots and then they're selling with tens of millions of lots back down, and they're still in this buy position. So when they buy right here, they're actually in drawdown. So what they do is they bring price back up to this candle one last time before pushing it down in the direction that you want it to go. So that's where you take your entry. The last candle up before the down move, right? That's where you take your entry. So you can see price comes right back up to that area. You would have had like a couple pips in drawdown. And then right now it's up about 100 pips. So that is like the summary of the strategy. You don't need to know everything. All you need to be able to do is at least recognize the pattern at first, and then everything else will make sense later on. So price comes up, boom, price comes up, boom. Everyone's selling right here. So what does that mean? That means is, boom, there's liquidity up here. What's liquidity? Everybody's stop loss is up here. Not only are people's stop losses up here, but there's a lot of buy stops up here. What's a buy stop? When price closes above this zone, a lot of people are buying because now they're like, oh, okay, well, if price isn't going to reverse right here and price closes above this zone, then it has to go up. That's what people are thinking. So not only are people's stop losses getting hit, but people's buy stops are getting hit. So they're entering buy positions right here, and then their stop loss gets hit when they force the market back down. But what do you need to know? What you need to know is when they shoot price up, this last candle up before this last candle down, their buy position still here is in drawdown. The bank's buy position in here is still in drawdown. So they have to bring it up to that candle, the open or the 50%, at least one more time before pushing it in the direction that you knew it was going to go. So check this out. This is how you get sniper entries. This is how you like get 0 to like minimal drawdown, and you have really good risk to reward ratio. Like the overall risk to reward for this trade is like the bare minimum risk to reward trade I'll take is a 1 to 3, meaning like I'll risk 10 pips to gain 30 pips. I'll risk 2% of my trading account to potentially gain 6%. I'll risk 20 pips to gain 30 pips, right? You want to have a good risk to reward ratio. Because, well, depending on what strategy you're using, like if you're using 1-to-1, then you have to have an insane, accuracy. But if you're using like 1-to-3, 1-to-4, 1-to-10, 1-to-20, if you're using 1-to-10, then you can literally lose 9 trades in a row and win the 10th trade and still be in a good position, guys. So yeah, so it's all about risk to reward ratios. the bare minimum you want to do, in my personal opinion, with this strategy is 1 to 3. So that's one example. This was on Thursday that study called this one. Let's see what else. Let's look at an example of a buy. So check this out. This happened about a week ago. No, it might have been 2 weeks ago. So I'm gonna go an hour. Oh yeah, this is, all right. So check this out. By the way, guys, one thing that's very, very, very important that you need to know is that the markets are fractal. What does that mean? What that means is the same patterns that you'll see on a bigger time frame are oftentimes the same patterns that you'll see on a smaller time frame. So this works on all the different time frames. So you could do this, but check this out. So for example, price comes down, creates a quote unquote floor, right? And then price comes down again, and you see all these wicks, all this rejection from this zone, all this rejection. And then what happens? Price shoots down before shooting back up, hitting people's stop losses down here before shooting back up. However, what you got to understand is when they shoot price down and shoot it back up, they're in drawdown on these sell positions. So they got to bring price back down to the zone before moving in the direction that you want it to go. So this trade was insane. So you could have had a 16 pip stop loss, and the overall target was, 220 pips. So what's that? That is a 1 to 11. Yeah, I believe 1 to 11 risk to reward ratio. That's insane. Not to mention that it continued going up after that. That was just my target. But dude, look at this. Had you had maybe trailed your stop loss, this went for a potential of almost 600 pips, right? And this is on a regular currency pair. This is Euro USD, which is a quote unquote slow moving currency. So check this out. Let's say that you were risking 2%. Guys, let's do some math here. Let's say, I want you guys to understand, this is why you don't need to take a million trades every single day. You could take 1, 2, or a few trades throughout the week in high accuracy, low risk trades with, low risk and high reward, and put yourself in the best position possible. But let's just say, I'm gonna do some math here really quick. Let's see. All right, guys. So let's say you have $1,000 in a trading account, just using that as an example. And let's say that your stop loss was, let's say you're risking 2%. You're risking 2% of your account, which is 20 pips, right? 2% of your account is 20 pips. If you rode this all the way potentially to the top, you would have caught about 600 pips. If you were risking 2% down here with a proper lot size and you caught 600 pips, you would have made 60% of your account on just one trade. This is just one trade idea. How would you like to risk 2% of your account this much to gain 60% of your account without over leveraging, with using proper risk? That's the power of institutional trading. This is what I'm talking about. You're not going to see the market come down and then shoot up. You're going to see the market come down, hit everyone's stop loss, and then shoot up, come back one last time, and that's where you find the entry before it continues moving. So let's see if we could find another example here really quick. Check this out. What's up? Yeah, one sec. So check this out, guys. This right here is Euro CAD. What do you see? Price comes up, boom. Price comes up again, boom. Double top. Price comes up here again for a third time. What do you think everyone's thinking? Sell, 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 sell. What do you got to do? You got to observe the masses and do the opposite. Because why? Why is it that price shoots up and then shoots right back down? Answer is because the banks they could see everybody's stop loss. They could see these basic patterns, right? And so what do? You wait, you're patient. Well, to be honest with you, you could have actually entered right here. Boom. So it comes down and then it comes right back up to the opening of this candle. And again, you would have had zero drawdown, literally, maybe like 1 or 2 pip drawdown, and then you would have caught 260 pips, which is 26% of your account. Now, check this out, guys. This is the last thing that I'm going to show you guys. So that's the strategy of institutional trading. That's how it works. Whenever you see a quote unquote strong zone, you see price bouncing off of it, and then all of a sudden you see price shoot through it and then go in the direction that you thought it was going to go. You wait for it to come back to this open. Why? Because banks bought right here to sell down here, and they're still in this buy position when it comes down. So price comes back up one more time to close them out of their buy positions before continuing in the direction that you guys want, or that they want to go. So the last thing I'm going to show you guys is, let's see. The last thing I want to show you guys is this. Let's go to Google Sheets real quick. All right, cool.
Cruiser, I have a question.
Yeah, go ahead.
All right, so can you go back to that chart that we were just looking at?
This one?
Yeah.
Okay.
And so there was the institutional movement and it went back up, would it have been a good idea to put a sell stop in that previous resistance area?
Yeah, you could put a sell, it's not a sell stop, but a sell limit. Yes.
Oh, okay. I thought, isn't it a sell stop when it's like above and then you're thinking that it's going to go down and then hits a certain area down there and then it sells?
A sell limit is like, okay, let's say price is down here, right? Down in this area,
Yeah.
anywhere.
And it goes.
A sell limit is when you place it above price. So this is obviously above down here, and you think it's going to sell, and you think it's going to go down. A sell stop is, let's say price is right here, and you think it's going to go, if it goes down, it's going to continue to go down. So you put it below
Yes.
price. Does that make sense?
Yeah, exactly.
Okay, yeah.
So would it have been a good idea to put a sell stop after the banks made that institutional movement and it broke resistance, and then you're thinking like, oh, once it goes back down to that previous resistance which it broke, that's where we would want to put a sell stop, or no?
You're saying it shoots up, yes?
Yeah.
And then it
She's
shoots
talking
back
about on
down.
the move down before the mitigation.
Okay. Yeah, no, you don't want to do that. You don't want to do that because sometimes if you put a sell stop like down here or anywhere without waiting for price to come back, sometimes it'll just keep going up. Does that make sense? So sometimes like it'll just break, you need to go up, or hit your sell stop and then go. So you want to put a sell limit. So when it comes back to the entry of this candle, then it puts you in a sell. But you don't want to put a sell stop.
All right. Okay. Thank you.
I don't know if that was confusing or not.
No, it's good. I got it.
Okay. Yeah. I never, ever use stops, buy stop or sell stop. I pretty much only use either market execution or buy limits or sell limits. If I could log into Google Sheets, that would be great. I don't know why this is so complicated. Log into Google Sheets. Let's see. Sorry guys, I had all this pulled up on Google Chrome and yeah, it's not working. So, but we're good. All right, so we are loading. So yeah, guys, I'm gonna kind of pull up the compound chart so you can see why you want to risk 2% to potentially gain 6% here really quick. Yo, low key, I've literally never seen my computer ever be this slow. This is ridiculous. All right. While I'm waiting for this, do you guys have any questions? Any other questions?
We got a pregunta in the chat box.
Okay, can you read it? Because I can't see the chat box.
Got
Wow,
you.
I'm on.
Okay, so I'll do my best narrator voice. We have a question. It says, who do you watch to learn more on institutional trading?
Okay, great. I was gonna, I'm gonna show you guys that as well. Let's see.
Good question, Elizabeth. I like it.
This is funny to me. All right, here we go. We're gonna trading plan. All right, well, here we go. Okay, cool. So basically when people ask me like how I do what I do, number one prerequisites is going through the 100 and 200 series, obviously to have the basic terminology. Howdoitrade.com/2020 course. This is actually a bunch of go lives recorded into a little institutional trading course. So this is like if you have an active subscription, then you could just jump on this website and then it teaches you everything that you need to know about institutional trading. But yeah, to answer your question, Elizabeth, here are all the educators that I watch. This is all in Pacific time. And I watch about an hour a day. I don't watch each of these every single time, but on average, these are the people that I watch and I do about an hour a day. So Mike Navarrete is one of my favorite educators. Justin Saini, John Dollery, Bounce Back Tuesday, Wednesday, Thursday at 6 a.m. They're the ones who kind of started the whole institutional trading movement. Again, Mike Navarrete, John Dollery, Mauricio, who trades on Steady. Those are all the educators that I watch and some of the times that I watch them. And I usually do about an hour a day. And here's a confirmation checklist as well. I was going to show you guys how Mike Navarrete hit 6 figures in his first year compounding his account with proper risk. But for whatever reason, Google Sheets doesn't want to load. However, there is a video on how he did it on YouTube. So you guys can just honestly check it out. This video changed my entire perspective on trading. So let's click on it actually so you guys can see it. Yeah, guys. So if you go to, this is what I was trying to show you guys on Google Sheets. However, honestly, you guys can just do it on your own time. Mike Navarrete is one of my favorite educators in the entire company and also has become one of my close friends. And he's been trading for 3 years. His first year trading, he hit 6 figures. His first year trading, after he hit 6 figures, company said, wow, you learn everything through IM, and then made him an educator. So not only did he, hit a 6-figure income in his first year of trading, but he also became an educator after only 1 year of trading and started teaching people on Go Live. And yeah, he created a $1,000 to $100,000 video. He calls it the 365 no 9 to 5 blueprint, how to go out there and basically walk away from your 9 to 5 in 1 year of trading, using institutional trading, using smart money concepts, using the things that we talked about and how to compound your account and do it the right way. Because the reality is, if you're over leveraging, you're going to eventually, what happens is either A, you're going to lose and you're going to blow your account, or you're going to lose a lot of your, most of your account, or you're going to win over leveraging and you're going to make a lot of money really fast. And that's going to reinforce the bad habit of over leveraging until you lose. So it's just it's a very vicious cycle. So you want to really practice proper risk management. So yeah, guys, check out this video on your guys' free time. It's only 50 minutes long. It's on John Guaman's YouTube. It's called $1,000 to $100,000. And this is super, super helpful, guys. So yeah, you know, the last thing I'll say is this. Every single time we've had somebody, I don't know where you guys are in your trading journey. If you're brand new, make sure you're going through the 100 and 200 series. Number two, make sure that you're copying trades from the Life by Design Trading Ideas chat. That's the quickest way to make money when you're brand new. But if you've been in this for 30, 60, 90 days or longer, the people who are having long-term success, the people who are getting a full-time income and having long-term success, it all comes from Go Live. I've never had somebody, every single time I ask somebody within our personal team how they started trading full-time, it's the same answer every single time. It's Go Live. So definitely check out some of these educators on this schedule. I know that this strategy is not for everybody. There's not one trading strategy for everybody. However, I believe that this is the trading strategy that makes the most sense. Because you're trading, you know, yes, based off of a pattern, but more so based off of because of, you know, what you're seeing. Because there's a lot of, I'm gonna just leave it at that, guys. I'm gonna just leave it at that. Yeah, guys. So definitely plug into Go Live. If you're plugging into Go Live an hour a day, watching one of these educators, it's game over. That's all you got to really do. So yeah, guys, I think that is it. Yeah, if we want to do like a couple questions, if there are any, then we can. But if not, that's all for today. The banks don't want to see us win. Facts. Martina, I'll send. I'm gonna send this. Send the email to Mandy, and then she could send it to everybody. Totally. Let's see. The only math I do is count my money. Y'all are clowns. All right. So yeah, guys. I think that's it. Tomorrow at 8 p.m. PST, 11 p.m. EST. Christian, who you know is a master of price trap, and myself. I'm gonna be doing institutional trading. We're gonna jump on Zoom with the squad tomorrow at 8 p.m. We're gonna start doing that weekly, every single week, just to you know, just trade with the team. So and give out some potential trade ideas for the week. So definitely jump on that. We'll post it in the regular Life by Design Telegram. But that's it, Mandy. I'll pass it back to you. And if you have anything else, great. If not, that is.
Cool. Thank you, guys. Thank you, Cruiser. Thank you, Lewis, for the call. Guys, just remember, all of us are here to help you guys. Use us as a resource. If you guys need any calls this week, if you need any help with trading, with charts, if you have any questions, ask, guys. In the beginning, I asked a million questions, and it kind of sucked to ask the same question over and over and over again, but you guys will definitely get it if you speak up. But yeah, let us know if you guys need anything, and I hope you guys have a great rest of your weekend. Bye, guys.
Bye. Thank you.
See ya.